Hey guys, welcome back to another video, and today we're going to be talking about Snap or Snapchat. So this chart is pretty interesting here. We had this long-term inverse head and shoulders that built out over the last few years, and it actually broke out this year. So what you usually expect after a breakout is a move to this 138.2% extension and this 161.8% extension up here. So far we've gotten the move to the 138.2% extension sitting right here, and the price is pulled back, and it's actually pulled back to its breakout level back here. So where I'd be looking to buy the stock is actually if we fall below these highs here, and we actually back test this trend line here, which is its neckline from its breakout, I would look to get long off this trend line, and I would set a stop below if we end up breaking back below this line. So I think you'll have a decent entry at around 1980 to 1970 to enter in the stock, and you can just put your risk versus this trend line here, and that I think you'll have a decent entry and a decent trade here. Really anything below the $20 level should be a buy, and we should see a bounce off this trend line here, and I think there's a good chance we see continuation higher. Longer term, we kind of had, since its IPO, this ABC wave that built out, and now we're starting to complete a 5-wave cycle higher. We have this first wave here, this second wave lower here, this third wave higher here, and then this fourth wave down, which is still continuing to build out here. And I think once you come into demand here and we bounce off this level, it should push higher and make a fifth wave higher to this 161.8% extension that sits at around 30.70. So let's say you buy off this long-term trend line, you're only really risking 30 cents for around $10. You have almost a 1 to 20 risk reward in this trade, which is very good. So yeah, I think this has the potential to be a really great trade if we see a breakback below this these highs here, and we see a push lower down to this trend line here. I think this would be an amazing spot to take an entry, and we should get a move back to these highs and actually break these highs. Now, where you'd want to trim the position is actually you could trim the position. Let's say we get a move up back to here, back to around $25. You could trim half of the position here so you can reduce the risk in the trade, then raise your stop to break even. Then you can't really lose as long as we don't gap down 30%. But this way you can't really lose, and you can just ride the rest higher to this 161.8% extension sitting at around 30.70. I think there's a very good chance we can see this level over the next year. So let's say you want to take a long-term position in the stock. Well, what you'd want to see is actually a breakback below this trend line here, which I personally don't think happens, but it's definitely possible. So if we see that break below, you're going to want to see the price move down to this long-term trend line here, and that's where you could take a good long-term entry. As a shorter-term trade, I really like taking this position at around the 1980 level. I think this will be a great trade, but if you are looking to invest in the stock for the long term, you're going to want to wait because it is, quite elevated here, and I think if you want to get in the stock long term, a great entry would be this long-term trend line here that we have going back since these lows here. So yeah, anyways, that's my views on the stock. I think shorter term you get a little bit more downside, and then overall I think we do actually see the price push up to this $30 level over the next coming months to year. If this analysis helped you out in some sort of way, make sure you leave a like and subscribe. I'd really appreciate it. Yeah, thank you so much for watching the video.